Hello everyone and welcome back to my daily report market analysis videos with me, Richard, Pro Market Analyst at Hantec on Monday the 2nd of March. We're going to look at cable now, which I think has been under a lot of pressure in the recent few sessions really, and you can see the fact that again, with the dollar under pressure today, sterling is still falling, and that is dragging cable lower, and it really doesn't bode well at all for the outlook on sterling or cable especially, whereby we've seen the move below 27.65. That was a crucial level of support that was the November low, and that got breached on Friday, not into the close, but on an intraday basis. And again today, we've had a technical rally early morning today that's just been sold into. And you can see that here on the hourly chart, where once more the rally into resistance of overhead supply. 28.45 was that 20th of February low, up to 20 sort of 60 area before Friday's big sell-off. And look at that coming in again as the basis of resistance. And not only that, on the daily chart, 28.55 area is the 50% fib level of the big rally, the big bull run from that October low, from where Boris Johnson secured that deal with the EU. Now, we have seen that if that market is closing below that 27.65 level, which would also take out the 50% fib level, essentially that opens 61.8% fib at 27 figure. But I think more importantly, it really does suggest that sterling is under pressure on an ongoing basis now. It certainly seems as though that way. The momentum indicators are taking it. 35 on the RSI. That is the lowest it's been. You can see that low, 40 in October, 38 in September. So the lowest since August, that was the bottom, that September low, the bottom at 1957. And certainly it looks as though that that is the momentum is worse now than it was back then. So that's really interesting. And also the MACD line starting to deteriorate once more, as are the stochastics. Intraday rallies are being used as a selling opportunity. You've got the overhead supply now of all these lows pretty much through November through to January and February that will create the selling pressure through for any sort of technical rallies being sold into. Now, we've seen that again on the hourly chart, you've had that configuration where these little technical rallies that unwind the hourly RSI back towards the 50 mark is a point at which you see the selling pressure resuming once more. So you've got that resistance at 28.45 falling over again today, just consolidating a little bit around that 27.65 mark, which is interesting. So the market is paying some sort of attention to that key November low level, but a closing breach of that really would heap the pressure on and suggest that there is further retracement of this big bull run to be playing out. And as I said, 61.8% fib is at 27 figure, but then you're back at levels not seen since October, and to be honest, there's not a great deal of support on this run higher until you sort of come back towards the 26.25 area. So further weakness could easily be seen in sterling dollar in that environment. So certainly looking as though that the selling pressure is mounting once more. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos, and also go to our website to sign up for our webinar.